Here you are.
Stian, I'm
Hello.
here. How are you?
Good. Finally, we got on, right?
Live at 5.
There you go.
Live, or it could be live at 5:25. How's that sound?
Yeah, there you go. It's all good. Important thing is that we learned our lesson, right? Facebook took away the ability to go live with somebody. So yeah, good to know.
I would guess they were getting a lot of that with a lot of people taking advantage of free conference calls.
Right.
And they probably pulled it away.
Maybe.
So,
well,
yeah.
Then Zoom comes in and steals their market share. So
there you go. Give it to Zoom.
Yeah, it all works out. Well, anyways, let's start the show. Let me introduce. Let's just go live. Even though we're doing this on Zoom, let's pretend like we're live. Let's just talk at the camera.
Sounds good to me.
All right, great. So, hello everybody. My name is Leo, and this is my show, How's It Going, where I talk about things related to real estate, and you might learn a thing or two. So, today I am with a very special guest who I can't wait to introduce you to. He's right there on the screen, but just a quick disclaimer about the things that we cover during this show. All information covered is just for recreational and informational purposes only. So just do your own due diligence before making any material decisions. Now, with that being said, I want to introduce you guys to somebody who's been in the business for over 30 years. He's been in the real estate industry. He's
Long time.
Yep. He's been a realtor, an investor, and now he is a mortgage lender. He is super knowledgeable and has a big heart. Everybody, this is Dan. And Dan, say hi to everybody.
Hey, Leo. Hey, everybody. And a big heart. That's nice. I like it.
Absolutely. Dan, what's that?
Go ahead. You say it.
Well, you're just helping me out earlier today, and you were rewarded with quite a situation.
I was rewarded by getting my car slammed into on Commonwealth Avenue. It's all good. It's all good. Worst things could happen. As long as no one gets hurt, it's all good.
Yep. The show must go on, right?
Absolutely.
You get hit at 3 and now you're on at 5. That's pretty crazy.
Life is good.
Yeah. Well, anyways,
so a lot happening in the real estate industry, and a lot of changes, changes to the lending environment due to what the rest of the world is going through, and obviously, we're all facing the COVID-19 and pandemic and the slowdown or the shutdown of a lot of businesses around the country. It's been devastating to the economy instantly. We went from having a fast flowing free economy to overnight.
Exactly.
And that's obviously you've seen it in your real estate sales, and you've seen it in mortgage lending to a huge extent, and not all to the bad. A lot of it, a lot of what we've seen has actually been very good in the mortgage lending. So in the real estate sales, I talk to realtors every day that are as busy as they've ever been.
Right.
So, and we're all trying to adapt. Instead of the two of us sitting at the same table, we're sitting 20 miles apart to try to make sure that it's proper social distancing.
Definitely. And and that's why I wanted to make today's or this week's topic how financing has been affected in the COVID-19 world. So as Dan, you already gave an introduction of what's going on in the market in general. Why don't you start us off, like in a nutshell, what's going on in the mortgage market for you?
Okay, so what we saw almost overnight, and this goes back to the first and second week in March,
Yeah.
when, all of a sudden, we're hearing things like the NCAA tournament is going to be canceled, and people are like, wow. And then, you start to hear, well, we're going to start, slowly shutting down some things. Well, the markets took a huge panic almost instantly.
Mm-hmm.
And when the discussions came out in mid-March, when the president was addressing the country, and then listening to Steve Mnuchin, that they instantly came out with, well, we know there's going to be trouble for a lot of people they're going to be losing jobs or losing income, or getting less income on a job. They instantly came out with what they said would be a 3-month forbearance on mortgage payments.
Mm-hmm.
But it came out instantly with no direction from either the federal agencies, Fannie Mae, Freddie Mac, Ginnie Mae, which handles the FHA program, and no direction for mortgage servicers. Mm-hmm. So when you're a mortgage servicer, you still have a duty to make the interest payments and the tax payments and the insurance payments on the property, even if you're not collecting any money from the borrower.
Mm-hmm.
So go ahead.
Just real quick, didn't mean to interrupt. Just
sure.
In case somebody here doesn't know what that term means.
Oh, sure. Yeah, I'm sorry. Forbearance. Forbearance, in very layman's terms, it's the mortgage lender saying you don't need to make payments for a set period of time.
Wow. And they did that for 3 months or 12 months, you said?
They did it for 90 days, which is 3 months. Mm-hmm. There is talk that will be extended, and a lot of different discussions going on. But instantly, that created a huge liquidity problem in the mortgage lending market. Right. Because now the mortgage servicers are saying, well, wait a minute, if I can't collect any payments for 3 months, do I want to write any new loans right now? That's a very scary concept. Okay. We saw FHA lending come to almost a crawl, because in order to protect themselves, the servicers and the purchasers of FHA mortgages said, we'll still write FHA mortgages, but only at a 700 FICO score, which is a very high FICO score, only with, own down payments and different factors plugged in. Mm-hmm. So many lenders across the country stopped doing FHAs. Many lenders across the country stopped writing jumbo mortgages. And we all sat, for about a 3-week period, kind of scratching our head, trying to figure out, all right, what's the next step here? Right. Fortunately, what we've seen come through after that 3-week period, and all that happened while the slowdown in the economy caused interest rates actually to come down. The Federal Reserve announced that they would start buying existing mortgages. But that doesn't help the servicers. Long story. That they'd be right. The federal government would be the end. The Federal Reserve, not federal government. Sorry, the Federal Reserve would be the end investor in the mortgages, so that the liquidity came into the market in terms of lower rates, but not in terms of money to lend. So that period lasted about 3 weeks. Fortunately, we've, my company, Mortgage Network Inc., we kept writing mortgages and kept writing FHA mortgages and kept writing jumbo mortgages. In fact, we're doing, $1 million mortgages on a regular basis, thank God. But a lot of my competition found liquidity issues and did not have the ability to do mortgages. So that said, at the same time, we had, a huge spike in unemployment. So first-time buyers that had been bid out of the market for the last 6 months or a year, all of a sudden, if they had jobs and felt secure, they're outbidding on properties that they don't have the competition anymore and are able to get purchases. So all this happens, we've got first-time buyers who rely heavily on programs like the FHA and like mass housing and like a lot of the state bond programs are getting offers accepted, And mortgage lenders like myself sit back and scratching our heads saying, all right, well, they don't qualify for the program I had them in 6 months ago when I issued the pre-approval. Now I have to scramble and find suitable financing for the new buyers. And it proved to be a real chore for a lot of mortgage bankers to get deals done. And, like I say, thank God I work for a company that has liquidity, and we had the ability to get loans done, but with some changes and some negotiations and good old fashioned hard work.
Yeah.
So.
Wow. So that it seems like there's quite a lot going on in the mortgage world. And
it's been crazy. Rates are as low as they've ever been.
Mm-hmm.
And I know one of my big competitors, you hear them on the radio all the time, will say, if you are in a position to refinance, it might be a good time. Mm-hmm. Unfortunately, so much of the world is not employed right now.
Right.
The people that really could use the refinance can't take advantage of it. We had a deal today where we talked to a customer, 3 or 4 weeks ago, got them a pre-approval. They're all excited. They got an offer accepted last night. Unfortunately, they received notice to be laid off as of Friday.
Wow.
So, and there's a lot of that going on in the world right now. So we need to, as the economy starts to open back up, start to put people back to work, that should help it. But it's, it's a double-edged sword.
Right. So it sounds like right now it's still a good time to refinance and get a mortgage if you can.
Absolutely. If you are employed,
mm-hmm.
Things haven't changed for you. Thank God.
Mm-hmm.
Take advantage of it. Yeah, definitely. Kick the tires and look for the refinance opportunities. They're out there, and rates are as low as they've ever been.
Okay.
If you're a first-time home buyer, and you've been, pushed back from the market for the last, 6 months, year because of all the competition,
mm-hmm.
you have to realize that 30% of the people that you were bidding against are no longer in the game. They can't, they've either lost their job or they're afraid of losing their job. So
right.
they're not moving forward. So there are some opportunities out there. We're seeing a real desire of the people that we're pre-qualifying now to find bigger and better homes, because the world has changed. People are working from home more,
right,
and probably will continue that trend. So they may have been looking for a 2-bedroom condo in the city. Now they're saying, well, I don't have to commute to the city. What about a 3 or 4-bedroom home in the western and northern suburbs, southern suburbs? Because I can afford a similar type of property, similar cost-wise, and that property may be larger in the suburbs.
Yeah,
and they're thinking about that. Yeah, so we are seeing a lot of that right now.
Mm-hmm. And just curious, so you speak of unemployment, so I'm sure there's a lot of people being furloughed right now.
Sure.
/ unemployed. So can you speak a little bit about that, like how someone who has been furloughed or unemployed would be affected in their ability to get financing?
So Fannie Mae, Freddie Mac, all of the agencies have not given any relief to someone that's unemployed. They're staying in their the regular qualification pattern, which says that you have to be employed or have income at the time of closing. So if there's been a change, you've lost your job or quote unquote furloughed. I don't know what the difference. I don't understand the difference in that is. You lose your job, you lose your job.
Right.
I think furlough makes it sound a little bit softer, but it's still heart wrenching for a lot of people.
Yeah.
So we are seeing that.
Yeah, I think as far as definition goes, unemployment is more like, okay, sorry, but that's it. Whereas furlough is like, hey, we just don't have the money to pay you right now, so just go fend for yourself for a moment and then come back when we can get you back.
Oh, I get it. I get it, but it doesn't
Yeah,
make
yeah,
much difference to the guy who's trying to feed his family.
definitely.
It's,
Yeah,
it's a very tough situation out there for a lot of people.
right,
And so
definitely. So what would you recommend like the average American do in like a situation like this?
so it opens up some opportunities if you are working.
Mm-hmm.
Like we already touched on, if you're working and secure in your employment,
Mm-hmm.
and we all know the fields that strike that. If you are secure in your employment and you are secure in your if you two incomes, if you're both secure in your incomes, then by all means, number one, it's a great time to refinance and restructure. And refinance can be for either one, lowering the rate, or two, taking some cash out of your home in your current position and capitalizing on it. There are a lot of people doing that. I have a customer that's taking cash out of his home right now to buy into the stock market because the stock market's seeing dips. So, and his thought is he's going to buy in at bargains and maybe when he makes his big gains in the market, pay off his house, which again, options are out there. But if you're a buyer right now and you're secure,
Mm-hmm.
you will get a better opportunity to purchase the home you've been looking for than you had a year ago. The competition to buy that home is less. It might not be 30% less. It might be 20% less. It could be 50% less depending on the market. That, literally, up to 50% less people are looking at that same house today. So
Right.
by all means, take advantage of it.
Definitely.
As a seller right now,
Mm-hmm.
there's still a shortage in the Northeast. And Coldwell Banker came out with a report today, to plug your company.
Yeah.
Coldwell Banker came out with a report today showing that there are more buyers looking in the Northeast
Mm-hmm.
than there are sellers to sell,
Right.
even today. And that's a current report.
Mm-hmm.
So it's a great time to sell your home.
Definitely.
Again, if you're in the position to do so and can afford to move someplace else.
Mm-hmm.
So,
Yeah. I couldn't
and
say it better myself.
I think you'll see, that will be the trend for the upcoming, spring market. Now,
Mm-hmm.
you also know I travel a bit. I was down in Florida last week.
Yep.
I drove up from Florida on over the weekend. I actually had lunch in Savannah, Georgia on Saturday.
Mm-hmm.
So if you had asked me a month ago how long it was going to take for this economy to bounce back,
Mm-hmm.
I would have told you it's going to take a year and a half.
Okay.
Georgia's been open 3 weeks.
Sure.
People in Georgia are acting like there never was any virus. The restaurants are full. The restaurants are full. The people out, they're shopping. They're
Mm-hmm.
out in around. And again, they're not. You there?
Yeah.
I'm
Yeah.
sorry, you blank for a minute. They're not hugging each other
Right.
and kissing, but they are out shopping and
Right.
getting back. So I think
Right.
you will see the economy bounce back faster than a lot of people are telling you.
Yeah.
If that's true, then now it could never be a better time to buy, because if the economy does come back as fast, those people that you were bidding against 6 months ago are going to be right back out shopping again.
It's true.
And maybe for a bigger house and a better house than they were shopping for before, because many companies, ours included, have everybody working from home.
Mm-hmm.
We're doing it right, working from home. We're happy to give our employees the option to work from home going forward.
Right.
So the average person that was looking for the 2-bedroom house now needs 3 bedrooms or even 4 bedrooms because they need a home office.
Right.
And they need more space. Gyms have been closed now, and you and I work out together. So gyms have been closed now for 6 days, right?
Right.
A a lot of us looking at that saying, well, wait a minute, my gym may never reopen the way it was. I want a home gym.
Yep.
I want more space in my existing property or more space in my new property to put in a home gym.
Right.
And, and I think you'll see, if you own that, 4-bedroom or 5-bedroom house in the western or northern suburbs, great time to get it ready to go to the market.
Right.
It really is. If you don't need the space, somebody else does. And it's a great time to start looking at that. And I think you'll see that in your general market. But
yeah, exactly. And I was saying last time too, I think right now the coronavirus situation, it's more of a health crisis that's affecting the economy. And the economy has a short memory. So as you said, when things go back to normal, when people open back up again, the market's going to move past this whole situation pretty quickly, is what I was predicting.
I think so too. And I think we'll, obviously it all remains to be seen, but there's serious positive signs on the horizon.
Definitely.
That we're thank God that the cases seem to be diminishing in most of the country, and people are getting healthy. Thank God. It didn't hit to the level that it could have, and it's lots of prayers for anybody that suffered through or has lost people. But it's I think we'll see this economy come roaring back quickly, and when it does, you will see a rise in house prices in suburbia. I think you'll see less of a demand downtown in the cities, and that's okay if you still have the desire to live in the city. That's good news for you. You'll find bargains in that market.
Right.
I think there's a lot of people. I own rental property, as I told you. Yeah. I have very, very little rent coming in right now. Very little. And that's it's unfortunate. I do realize that, my tenants don't have the ability.
Right.
And I understand it, and I'm not angry at it. I'm angry at, the situation, but not at the people. And I hope, they can get back to work soon so they can start paying rent.
Definitely.
But, and I'm sure we will see that, but there's a real move out there right now to see more positive things coming. And I think you're starting to see more traffic on the roads. You're starting to see more people out shopping. We're getting a bunch of inquiries, on our websites, and I'm sure you are on your website to continue, home shopping.
Yeah, definitely. So we both sort of agree that the market should come back pretty quickly after this. But of course, nobody knows for sure. I mean, otherwise we would all be filthy rich. So when do you think, in terms of a time frame, that this whole thing would come to an end?
In terms of opening back up?
Yeah,
the economy opening back up. So we hear a lot of talk about new normal, the new normal, and everything. What the hell's the new normal? I think a lot of us scratching our head. What does new normal mean? I think you'll see more people working from home on a regular basis. Yeah. I think, and not just because the company's going to save money in real estate, in the commercial end, but you took people, in the case of our company, we took all of our inside people, meaning our processors, underwriters, closers, legal department, our appraisers, everybody. We took them from being inside people, going to the office every day, essentially punching the clock and saying, hey, I'm here, and sitting at their desk. We took them from that to totally working from home in 3 business days.
Wow.
You think about that, right? So our IT department, they did it. They brought it up and running, made sure people had the proper internet and the proper, channels and VPNs and all that. They did it. But if my company did, that means a lot of other companies did it. The Boston school system called all the students in, said, here's your curriculum, go home and you're going to study from home.
Mm-hmm.
To me is absolutely amazing, but they did it. So I think you're going to see a lot of people say, wait a minute, I worked from home, I got my job done. Your company's going to say, yeah, we'd rather have you work from home. Your productivity's been better since working from home. Our productivity's way up. So if we're getting more employee, and I hate to use those terms, but we're getting more productivity out of an employee, and they no longer have to, get up at 6 o'clock in the morning, make sure the kids are okay as they get them off to school, rush and get ready and shower, and then jump in the car and drive an hour. Now they get up at 7, they have a leisurely breakfast, they flip on their computer at 7:30, and they're at work, done. Mm-hmm. And we find them working until, longer hours. I hope none of them are watching this, but we appreciate it. But we find them working. We find them working longer hours and getting more done in the day. So the average employee is going to say, I don't want to get up at, and rush off to the office and sit in traffic anymore. Right. And the average employer is going to say, well, wait a minute, if I can cut my commercial real estate bill in half, doesn't it make it better for everybody?
Right.
Except for the commercial landlord.
Yep.
All right. That the commercial landlord's going to suffer. Mm-hmm. The residential market will continue strong. And again, it's opinion, but the residential market will continue strong because that employer now says, especially as the economy gets rolling and people are more secure, that employee is going to say, I love working from home, but it's not big enough.
Right.
So let's enlarge it. So commercial residential contractors will be busy doing additions, and or people will say, hey, why don't I just move down the road and buy that 4-bedroom house as opposed to the 2-bedroom? Mm-hmm. I think you'll see that. So
exactly.
So how long? I think it's going to be faster than you think because of what I witnessed in Georgia. What I witnessed in northern Florida. Jacksonville area opened up, 2 weeks ago. I met some friends for dinner, masks, we were spread out, waving from across the room. 7 days later, everybody is acting like there was no virus.
Right.
So I think it's going to be sooner than I think, fortunately, Americans don't like to remember the bad.
Right.
They remember the good and they keep moving forward. And thank God for that. Thank God for that.
Definitely. So it's good to be optimistic in life in general. But yeah, that's really well said. And we're sort of running out of time here. So I just want to summarize sort of what we've discussed during this past few minutes. So how the COVID-19 situation has affected financing in a nutshell, and feel free to add any points if I miss anything, is that right now, although there are sort of strict regulations, like you have to keep your distance, wear gloves, mask, and all the good stuff, it's still a good opportunity for people looking to get into a home to get a mortgage because the rates are low. And the people looking to sell their house are also in a good position because right now there's not a lot of inventory out there, so there's a less competition, so to speak.
Absolutely. And can I add one thing, Lou?
Yeah, definitely.
For the person that's selling their home,
mm-hmm.
they need to realize, like with you and your company, you have the ability to market that home without anybody ever coming into it.
Definitely.
The videography, the videography has got to the point where you can go out and you can show a home without anybody ever going into it. And that's amazing. For us old timers, we look back and go, wow, that's amazing. Right. But I dealt with a customer night before last, mm-hmm. buying $1.65 million house in the western suburbs. Mm-hmm. $1.65 million house in the western suburbs.
Yep.
He's in Colorado. He has never actually been on the street that the house is on.
Right.
Not as he's not been in the house. He's not even been on the street. he's seen enough in video to put the offer in.
Right.
So
and
there's a lot of
think
that going on.
Important too.
So
And I feel like this new normal is here to stay, in a sense, as you touched upon, how we realtors have been marketing homes are a lot more technologically involved now. So, for example, we do like a virtual tour. So we take a 3D picture of the house so that people can walk through it virtually without being inside. We do video tours and pictures and all the fun stuff. And when someone wants to see the house, you walk through it with them on FaceTime or WhatsApp or Zoom or any one of those video apps. That way they can see it. And home inspection and lending, that's all done virtually too. So I think that's just, it takes away a lot of the friction from having to coordinate things, having to go from point A to point B and do this, do that. So I think the technology is here to stay.
Absolutely. Well, I mean, it makes your life easier too. I mean, you would have to drive, 30 miles to, back and forth to appointments. You're not doing that anymore. You can deal with more buyers and keep them happy. Deal with more sellers and keep them happy. The initial is difficult, but once you're past that, once you've got that listing, videoed and active, and I've even seen where the realtor is relying on the seller to shoot the video, and present it, and people are marketing their property successfully.
Definitely. Yeah. So just continuing on with that. So we said that aside from it being just a temporary situation at hand where we have to take precautions like gloves, masks, and stuff, we said it's a good time for buyers to buy because of how attractive the rates are. A good time for sellers to put their house on the market because of how little competition there is. And also a shift in how you shop for your home. So instead of doing a lot of it in person, it's more so online now. And that's a lot of fun, right?
Absolutely.
Did I miss any points, Dan?
I think we covered a lot.
Okay.
We covered a lot in a short time, and I really appreciate you giving me the opportunity to speak. Definitely. I can be reached at danlionetta.com, and I'm the only Dan Lionetta in the world, so I'm very Googleable.
Nice.
So
okay, sounds good. So danlionetta.com. I'll put the link in the description below when I post this video.
Thank you.
And of course, if you all have any questions about mortgages, about real estate in general, Dan is super knowledgeable, and he'd gladly be a resource for you, and so will I. And
thank you, Lil.
With that being said, I thank you, Dan, for joining me, and thank you all at home for tuning in. I hope you enjoyed it. Hope you learned something new, and I will see you next time. All right. See you, Dan.
Bye-bye.
See you, everybody.
Bye-bye.
Bye.